Interest rates are going up. Trying to get ahead is mighty, mighty tough. Bill collectors at my door. I need someone to help me raise my credit score.
Welcome to another edition of the Polto Show. This is the show to educate you right in your household. There's another good topic we have today, so don't make a mistake, because many mortgage companies went out of business because of people. Today, we're going to have a win-win solution. We must have knowledge and understanding, because if we don't, it's consumers' ignorance, and we'll follow the consumers. We have become very ignorant when it comes to our credit rights and mortgages. And today, we're gonna talk about how to help you to get through this. And we're hoping that next year you're going to get your mortgage, you're going to understand, get educated, because it's time to get your home, it's time to get your credit. And today, last week we did credit, but there's still a lot of things when it comes to mortgages as well. I have a special guest today, and he's special. He's a representative, and I love it because we understand one another. We understand one another when it comes to business, when it comes to mortgages. And I've known many mortgage companies, and he knows. He will tell you. I don't just jump the gun to go to mortgage companies or even real estates. Real estates I'm against. And I have one real estate. She's got to prove a point to me right now. But I'm against real estates too, and the reason for that is because they're out for a commission. They're just out for a commission. They're not out for your well-being. And they know I'm a consumer advocate. So, but today, my guest today, I treasure it because right now, I mean, we're working together. I have a lot of more questions. I'm sure you have questions. But he works the way I work. He stays by the phone. When a client calls, he's there for them. And he said to me, Pearl, when it comes to you, what do you think of me? And I said to him, well, I said, we're associates. I'm going to say we're associates. Because if I say we're friends, which we're not, we're just business. It's just business. And we care about the consumer. That's what I appreciate the one who's on my guest today. He appreciates the consumer. And he wants to get what's fair to them. And he wants to get what's good to them. And I love it. Because he said, well, do you like me? And I said, of course I like you. I said, but that's beside the point. What I want you to do. He said, well, I talk to your clients. I'm really up to par with them. And I talk nice to them. And I said, I don't really care. And that's the way I talk to them. Am I right, Joe?
You got it, Pearl.
I said, I don't really care. I said, what I want you to do is give them the right mortgage. So we have a lot of things to talk about. My guest today, I'm going to have him tell you about himself. He's been in the business for 20 years, and he knows what he's talking about more than any other business. And the ignorance of the people. When you say you're going to get a mortgage, don't fall short of just saying it. Do it. Don't be ignorant, because a lot of mortgage companies went under. And it's your job now, between here doing your credit and Joe doing your mortgage. We're going to work together for you. And he's going to tell you what you need, what you can, and then we'll interrupt and then we'll talk again. Joe, I want to welcome you. Please tell the people who you are, and what you do.
Hi, everybody. My name is Joe Miller. Like Pearl said, I've been in the industry for 20 years. I would like to thank Pearl for having me on the show. I'm really excited to be here and answer any questions that you may have. But as far as what I do, my job is to find a way to help people get homes or refinance their homes. And the best way to do that is to go over their credit, obviously, their income, and then what is called assets, which is your reserves. So what you do is you give me a call, we get on the phone, and then we look all those items over. From there, what I'm going to do is I'm going to look at every program available, which is out there. A lot of people think you have to put 20% down on a mortgage. That is completely incorrect. There are so many programs available, it will make your head spin.
Oh, wait a minute. So I'm going to stop you there, Joe. Suppose somebody doesn't have a penny and they want a mortgage. Is it profitable for them not to have a penny? to invest?
Well, yes, it is. There are programs out there. Let's just say, for instance, if you're a veteran, you've been in the military, you can put 0% down, not have to put a penny down out of pocket for a down payment. And if you have a really good real estate agent who is able to get the seller to go ahead and cover the closing costs, a lot of times I actually am giving money back to a borrower at a closing, because typically you have to put down maybe $1,000 for good faith deposit, and I'm giving that money back. So a veteran is one way of going to be able to get a zero down loan. The other one is what's called USDA. USDA is if you're interested in possibly living in more of a rural location where it's a little more countryish. Same situation. You do not have to put anything down. And again, if you have the right realtor, that's another way to go ahead and do another zero out of pocket. Not only that, but I have been pushing my company for a long time to get a program that could help out as well. And we also have a program where it can be 0% down, which obviously, if anybody is interested, I can explain that one a little bit more in detail. But yes, to answer your question, Pearl, there are programs out there that you can put next to nothing down.
So you have the experience enough to know all the programs, which a lot of mortgage companies don't. A lot of mortgage companies went under because of that. Let me ask you a question. Married couples, if one had credit problem and the other one didn't, what do you advise them to do?
Well, if you have one that has issues and one that doesn't, sometimes the first question I'll ask them is, okay, are you able to go ahead and do this on your own? If the answer is yes, okay. What we can do is we can put the one spouse on the loan, but mostly important that we can put the other spouse on the deed, which is very important because now you are 50% owner of the home. Now, if we have a situation where the one spouse cannot afford to do that on their own, then there's something what's called a non-occupant co-borrower. This is somebody who can go ahead and go on as a co-borrower, but does not have to live in the home. So there are different options. There are different ways. We could probably be on the phone for hours explaining all kinds of different ways to do these type of programs. But what I would say to you is that it is totally different than what it was once upon a time, where you had to put 20% down. There are so many different programs, and then what happens is if they don't fit, then that's when I try to get very, very creative as far as trying to come up with different ways and different ideas on how to qualify.
How about if a person filed bankruptcy? Do you take bankruptcy under the mortgage?
Yes, if you are under a Chapter 7, then what happens is FHA, which is a government loan, which is one of the most popular loans out there, they will allow you to go ahead and buy a home in 2 years after the bankruptcy. Chapter 13 is a little bit different. Typically, they go off of the file date. And as long as you have been on time with your attorney, then you would be able to go ahead and purchase probably about a year later.
Okay, now you're the expert on the mortgages, I'm the expert on credit. But if a lot of mortgage companies would say, I'm not sure if it's true or not, that's why I'm going to be asking you, not to buy a car as you're getting your mortgage. Is that true or false?
Absolutely true.
Okay.
And the reason is because I don't think I have to tell you, Pearl, because you are the credit specialist, is that a lot of people, when you're going to go ahead and purchase a car, are going to run your credit. And that is something that can definitely affect the score. That's on the credit side. But the other part of it is that now you might have qualified for a higher mortgage than you would with that car. With the car, you're going to have more debt. And if you have more debt, then you're not going to be able to qualify for as much.
Does the average person tell you that they're going to get a car, or do they avoid that from you, thinking that you're never going to find out?
Well, we always find out because what happens is when we do the first initial pull, then that's perfectly fine. Everything looks good. But then when they were getting ready to go to the table, there is what's called a soft pull to make sure that there was no new debt that was acquired since the last time the credit was pulled. So most times they are going to find that out. So what I do is I instruct my clients to please do not purchase anything that goes for cars, that goes for furniture before you've moved into the home. Please don't purchase anything until after the loan closes, because there have been instances when people didn't accept what I was saying. And unfortunately, we had issues at the end because they went and not only did they go ahead and get furniture and look for cars and things like that, but the deal fell apart.
Now I'm sure you like what I do for the clients, that I'm cleaning up their credit so they got a 700 score by the time you get them. And I like when I could give them to you, and I know you're going to answer all their questions. But isn't it in your shape with a mortgage company where they want to have people with good credit?
Well, the thing is, you do, but you don't necessarily have to. And the reason I bring that up is that if you are going to be a conventional customer, and what that means is the putting the down the 20% type of thing, then yes, you want to have the highest score possible. It also goes for if you're not putting 20% down, because there's always private mortgage insurance that's involved. And the higher your credit score, the lower the private mortgage insurance, which means is that your payment is less. However, if you have a credit score that's in the mid sixes, then that is going to be perfect for FHA, which is the government loan, because they don't really care too much about the credit score as a conventional loan does. And when I say conventional, I'm talking about Fannie Mae and Freddie Mac.
Okay, what about the couple that's getting a divorce? I hear this a lot, and they want to get a mortgage. Can they put that home into their name and not their spouse's if they're getting a divorce, or they have to do it together?
No, they can absolutely do that. What happens is that, and I deal with a lot of divorced couples. What happens is you'll have the one spouse that says, I have to buy out my other spouse. Okay, fine. So then what we do is we go ahead and we do the loan with them by themselves, but then the other spouse has to go ahead and sign what's called a quick claim deed, which means is that they are signing off on their rights to the property, which is going to be very important once they actually go to court and they work with the attorneys. So yes, they can do that.
So you recommend, so the average person doesn't really need, now a job they have to have, am I right? They have to have a good job.
Absolutely, yes.
Okay, do they have to work at their job for years or what?
The way it works is that you're looking for the borrower to have 2 years of experience. Doesn't mean you have to work at the same job for 2 years, just that you have 2 years of experience at the job. So you could work for one company for 1 year, work at another company for another year. That's perfectly acceptable. The other thing is, and this is the thing that a lot of people that are in college do not understand, is that if you're in college and you just got out and you got that new wonderful job, you don't have to necessarily have that job for 2 years because you were in college. So that is where there is an exception if you're getting out of college and you wanted to buy a home.
Okay, you make it sound really good though, but I'm going to ask you, what are the negatives that people are doing that you don't like?
Well, I mean, other than going late on payments, because let's just say, for instance, if you're looking to do, first of all, a refinance, if you're late on your mortgage more than twice in 1 year, you're not going to probably be able to do a refinance. If you are somebody who is out there spending more than your means and you're looking to purchase a home, the last thing anybody wants to do is put somebody in a home and they have no money after they got into the home, because now you're taking a chance that they're living paycheck to paycheck, and that's the last thing that you want to do. So yes, you do not have to have a ton of money to go ahead and to acquire a home, but you do still want to have a little bit in the bank account. So this way, once you do get into the home, that you don't feel like you're living paycheck to paycheck.
I like you because you're honest with the people and letting them know that what you're just saying. But as you're telling them this, do they really understand, or are they going to go to somebody else to think they're going to get approved by somebody else?
Well, that comes up too, because as you said, I've done this for 20 years. I'll be honest with you, I'm not one of those type of people that has to call 100 to 150 people a day on the internet to try to get them to do business with me. I am all self-referral. I have people that have been calling me for years, and the only way that's going to happen is by being honest and giving them honest answers to their questions and trying to steer them in the right direction. So
Amen.
yes, there are people though that will say, well, I'm not kind of hearing what I want to hear,
Mhm.
so maybe I'll just go and try somebody that will give me the answer that I want to hear. And the next thing you know, they're coming back to me again because they're saying, you know what, I should have listened to you in the beginning because they were just telling me everything that I wanted to hear, but when it was all said and done, it never even worked out.
Exactly. And then when they come back to you, then they have to be honest because you're only going to find out anyway. Am I right?
Exactly.
And when people come to me, like the first thing I do ask them when I'm doing their credit, I'm saying, "What are you trying to achieve?" And the person that says nothing, believe it or not, I don't believe them. If they say I'm trying to get a refinance or a mortgage, I believe it because this is why people do things. Is they want
Correct.
something to have good credit. They want something. Are you a bank or a broker or both?
No, I am a bank.
Okay.
And there's a big difference between being a bank, being a direct lender, and being a broker. The broker is unfortunately somebody that kind of pushes everything to everybody else and kind of stays out of it. A direct lender is somebody who is involved, but when it's all said and done, typically the loans get sold once they go to the table. A bank is where you are doing everything and you keep the loan in house. So for my people, what I tell them on the first conversation is that I am going to be your go-to person for everything from the minute we start to the minute we end. And the reason I can say that is because everybody has got to email me with everything that's going on with the loan. That goes from my assistant to the processors to the underwriters to the title to the appraisal company to the closing department. As a matter of fact, the loan can't even close unless I give my approval. So that's why when I work with my clients, they really appreciate it because they know that I'm taking care of everything. And if they ever have any questions, they know without a shadow of a doubt they can get me anytime they want,
I'm gonna interrupt you there.
weekends
I will
and
interrupt you there
holidays.
because that part, that's what attracted me with my clients with you. They would say they have called you all times, all hours, and you're available at all times. And I love it because I do ask them these questions. I want them to be honest with me. And they are. They're saying, Pearl, I can call him anytime. He answers me. He answers all the questions. Everything that I have to do, he answers the questions. And I said, and but that's good. That's good because you're getting that that positive thing with the clients, and then they get their mortgage, they get their refinance, and you look like the good guy because you know what you're doing.
Well, I appreciate that.
Well, you do because I do homework too. I dealt with many mortgage companies, and I was really didn't care for them. I didn't care for them because they said it like it was. They were out to make money, and they didn't want to deal with the people. The people couldn't even get a hold of them. And it got to the point I'm saying if I'm doing their credit and they got good credit, if they got good credit now, the mortgage company would want them. And some mortgage companies don't care. I mean, are you finding this out too? Or is this why mortgage companies went out
Oh,
of
absolutely. And it's like you said earlier in the show that once upon a time, everybody was in the mortgage industry, and a lot of it was because they had those type of programs that were very deceitful. They call them predatory lending. the type of programs that unfortunately put us in a lot of trouble and gave us a record of foreclosures for years. So what they did was they made sure when we got through that, if you wanted to be in the mortgage industry, you had to be licensed. And once everyone heard about that, the ones that were doing all the things that were crooked and underhanded, they got out of the industry because they knew they couldn't do that anymore because their license was going to be on the line. So now you're dealing with people that are more credible. Now, am I going to say that there's not still quite a few people out there that still try to just do whatever they can to make as much money as possible? I'd be lying if I said that there wasn't. That's something that definitely still goes on. And a lot of times I get phone calls from clients that say they just sounded like they were just after my money and they just really did not have a personal touch whatsoever. They were never available. And it just seemed like they were out to make a quick buck.
I'm agreeing. I do
Those
agree with you.
people weren't in the industry for very long.
I do agree with you there. I have clients, and I'm sure you know a few of them. They would call me after they were finished talking to you, and they would say, "Pearl, you're right. You were right about this person. You know, he called me back when he was supposed to. He gave me the education when he was supposed to." And then we realized that many people were ignorant when it comes to your rights with credit and mortgages, and it goes hand in hand. And if people understood that and not lied to you, or they can't lie to me because I'm only going to see the report, and they can't lie to you because you're only going to see the report. So, and if they want to someone else, they think they're getting one over, but they really don't. So that's being ignorant. So if you're not being ignorant and want that more, like my goals, and I'm sure it's the same as yours, I hope 2020, I hope I get as many people into their homes and their refinances to get where they should be going and not going backwards. And I'm sure you agree with me there.
100%. I agree with you.
Yeah. I mean, now let me know. I mean, you know I do credit and you know I send you clients and everything else. What's your opinion about that?
Absolutely. And the thing is that I would tell you right now, the one thing that I probably get the most is people that come to me and say, you know what, it's better for me just to rent than it is to own. And I say to them, well, here's the thing. First of all, you need to have your upfront payment, your last payment, your security payment. You need to have all those things. And then when it's all said and done, you will have a higher payment for your rent than you will for your mortgage. So why not give it a shot and try owning a home, which is yours, which at tax season is going to be an advantage because you can go ahead and you can get some of the interest written off. You know it's your home. You don't have to worry about the landlord telling you what you can, what you can't do. And most importantly, you will have a lower mortgage payment than you will a rent payment. So what's stopping you from taking advantage of that?
Good. The refinances, like take us through the steps. What a person, when they call you to say, I want to refinance, what happens next?
Absolutely. What happens is when I get a phone call from someone that says, I would like to refinance, obviously we'll run the credit. I'll go over the income with them initially. And then we'll also check and get a decent idea as far as what's going on in the area to see how much equity they have to work with. Now, there's different type of refinances. If you're looking to just say, for instance, if you have an interest rate that's in the fives and you want to go ahead and you want to lower that interest rate, absolutely you can do that. Then there's some people that would say, well, you know what? I really would like to get rid of this debt because it's really holding me back. Well, we can absolutely do that as well. And then once it's all said and done, you could save a lot of money a lot of times when it comes to those type of things. And then the last one is the home improvements. Well, you know what? If you're looking to go ahead and do a home improvement, then what you can do is maybe kill two birds with one stone by getting the cash that you need, depending on what your interest rate is, maybe even lowering your interest rate and getting everything onto a fixed rate as opposed to getting a line of credit, which is completely adjustable.
Okay, and if somebody had a refinance and the one step, you send somebody over, is it you or is your underwriting department send somebody over to check your house, to check everything? I mean,
No,
how does
what
that
that
work?
is
And
that
does
what we
anybody
do
get turned
is
down?
I'm sorry?
Does anybody get turned down? Like when you send somebody out to do a refinance to check your property, now it's the law, you said they have to come out to check it. Does anybody get turned down?
We never really get to that part. The reason is because, as I was saying before, because of my experience in the industry, what I'm going to do is I'm going to look over everything completely, making sure that this is a loan that can go through to the point where I will have a conversation with the underwriter and ask them their opinion. If they tell me everything looks good with the income and the credit, then the last step we have is to go ahead and have the appraiser go out there to appraise the home. But before we get to that point, on the first call, I will go over with them what it looks like in the area. What do they think the house is worth? Has anybody on their block sold? What we try to do is we try to exhaust every opportunity possible to make sure that when they have to go ahead and eventually do the appraisal, that the deal is going to get done. It's not going to be just somebody who just says, okay, get me all your paperwork and let's get the appraiser out there. And they already know that the loan's not going to get done. And I can't do that. And that's the reason why I will go the extra mile to make sure that we can get something done before we even get going with the appraisal.
All right, another problem that was said to me is when somebody files their income taxes. Naturally, as you know, they don't claim as much as they do. They don't want to pay
Mm-hmm.
taxes. Now that comes to you. What do you tell these people that they are making enough now, but they're telling you, they're showing on their taxes that they're not making enough. What do you do in that case?
Well, it's going to depend. Usually, when you're talking about somebody who is not showing a whole lot on the tax returns, usually they're in business for self. And the reason is because, yes, when you're in business for self, you want to write off as much as you possibly can so you don't have to pay as much in taxes. Unfortunately, there is an issue when it comes to buying a home or refinancing a home with that, because in the mortgage industry, with tax returns, if you're self-employed, they're not going off of the gross amount, they're going off of the net amount, which is after expenses and profits and losses and all those good things, which unfortunately does affect people who are looking to do loans. Now, I have a loan, what is called a bank statement program, which is what I do with a lot of my self-employed clients. So if you're really looking to refinance or to buy a home, it's not that you can't do that. It's just that we're probably not going to be able to use tax returns. We would have to go with the bank statement program.
Now, I was told that the bank statement is what?
Bank statement is when if you are self-employed and you put all your money that you make from the company in your personal account, you can count 100% of the deposits. If you are business for self and you deposit all your money into the business account, then typically they allow you to count 50% of the deposits. But what they're going to do is they're going to take whether it is 1 year or 2 years of all bank statements, all pages. And what they're going to do is they're going to add up all the deposits, and then they're going to divide it by either 12 for 1 year or 24 for 2 years, and then that would become your income to qualify.
Well, then, okay. My question to you is then, why does everybody not rent and get a mortgage then? If you're saying you don't have to put that much down, this is what I'm saying. Many consumers are ignorant when it comes to credit mortgages. They don't know this. And this is why I believe, now you tell me, this is why many mortgage companies did go under last year. And this year they went under. How come?
A lot of them went under because, as we were saying before, unfortunately, there was what's called negative amortization loans. And what a negative amortization loan is, to give you an example, is let's say, for instance, if you bought a home for $200,000, but you had an interest rate that was almost like at 1%, which is unheard of. So your mortgage payment is next to nothing. But if you keep on making that next to nothing mortgage payment, instead of your balance going down on your property, it goes up. So now, if you want to go ahead and refinance, you can't do it because you're losing equity. It's called negative equity. If you want to sell your home, it's the same situation. Instead of you making money on your property, you're losing money on your property. That's just one example. The other one, which is the most important one that really put us into a jam, is what's called stated income. Stated income is when you were able to go ahead and say, I make $100,000, even though you only make 30. Well, okay, you say you make 100,000, you get a loan. Well, lo and behold, the people that were buying homes that they should not be in because their income was not able to handle it were going and filing for foreclosure. So what's happening is that a lot of those companies that were publicizing those type of programs went out of business. And now they have to compete with legitimate companies who have been doing it the right way all along, and they can't compete.
I was against that, as I said, as a consumer advocate on my part. I'm very honest with the people. And when they say to me, I have a company, he's a friend, he's a neighbor, he's this, he's that, and they trust them. But I don't trust them because they just want the sale. Am I right? Am I thinking that way? Or they just want it because they're a neighbor, a friend, whatever?
Well, you always have the neighbor, the friend type of thing. They work with the people that they know. But the problem is though, the people that they know always, no, I shouldn't say always, a lot of the times are not actually working on their best benefit. And the reason is because if they are shady, then they're just out there to make the money, and they know because it's a friend that they're not going to question them because they're friends, and the friend is going to think that the other friend is taking care of them. But unfortunately, a lot of that was going on as well. And as I was saying a little bit earlier, when even the friend understands that the friend that they went to is finally not doing the right thing, they'll come to me and I'll give them honest answers. And the next thing you know, the friend isn't doing as much business because they're getting a lot of bad publicity.
That comes to me. That question comes to me a lot, and I'm glad the way you answer them. You're honest with the people because they will respect you because they do not know. They think the friend's going to be helping them out or their neighbor's going to be helping them out, and they really don't. You're right. They're after the money. And that's pretty sad. This is why a lot of mortgage companies went out of business. Isn't that kind of stupid and crazy, though? And just be honest, just be honest, and you're going to get what you want.
Absolutely. And I'll be honest with you, Pearl. There's been numerous times when I have lost clients because of honesty. They wanted what they wanted, and they didn't hear what I was telling them. And sometimes I would even email them proof, and it still wasn't good enough. And I said, you know what? I completely understand. You absolutely have the right to go ahead and speak with somebody else, but just please keep in mind if things don't work out with them, I'm more than happy to go ahead and help you out.
And that's good. That's good because you're telling them I'm still here. I still will be here. And the interest rate, as you said, it all depends on the person. It all depends on their credit. It depends on everything else. Has anybody ever lied to you about their credit?
Well, they try that in the beginning because normally what happens is before I go ahead and I run the credit, I'll always ask, I'll say, hey, when's the last time you actually ran your credit? And they'll tell me, and I'll say, do you remember what type of score it was? Was it in the fives? Was it in the sixes? Was it in the sevens? And they'll say what they think that it is. And then obviously, as you know, we'll go ahead and we'll run the credit and we'll say, well, it wasn't as high as we thought it was, but it doesn't mean that there's not something that we can do. We're just going to have to work a little harder, and together we'll get it done.
That's why they trust you, and they don't trust the average mortgage people that did go out of business because they were lied to, and or they went to someone else, or they went to their friends, or they went to their relatives or their neighbors, and people doesn't know this. They don't know the true meaning. Like I do it with credit. A lot of people, I used to know all the credit repair companies out there, and it's a shame. Half of them are lying to the people, and half of them don't know what they're doing. And now we got. I respect you for what you're doing because you are honest with the people as much as I know. I hope you're like this next year. I'm sure you will be for 20 years. But a lot of people doesn't understand. It's lack of knowledge with a lot of people, and this is why I said a lot of consumers were ignorant to this point when they want to refinance or buy a home. They were ignorant, and it wasn't their fault. It wasn't their fault. They just weren't being told correctly or being honest, the honest answers. Am I right?
Absolutely. As a matter of fact, you hit on a good point there. There's a lot of times when I speak with people on the phone and they said that they spoke with somebody before, but they can't believe the difference in the one call versus the call with me because I slow everything down. I try to make it as understandable as possible. And I'll tell people, look, if we're on the phone for an hour and a half, it doesn't matter to me. The most important thing is that when we hang up the phone, you understand what's going on. And if you don't, you've got to please let me know. Call me, text me, email me. You have to let me know. And they appreciate that because they'll say, well, the person that I was on the phone with before didn't tell me anything. All they said was to get my paperwork sent over to them so we can go ahead and order an appraisal. Didn't explain anything. I had no idea what I was doing. And I appreciate you taking the time.
You know, as I said, I'm glad we're in connection here. And the reason why I'm glad we're in connection here, because a lot of my clients, they will call me, new clients even, they'll call me and they'll say, I was told this and I was told that, and I know you're going to be honest with me and say it right to the point. And I wanted to find a mortgage guy like that. Not to, like me, like where I work, but that's the only way to be for the people to respect you, because the people will call you up to say, you were right. Now I need to know this now, and I know you're going to take the time. And you do. You take the time with these people as well. And this is the way it's supposed to be. We're in business for a reason. We're in business as advocates, and I think you're an advocate for the people. It's not just making money. You know, if you're right to the people, honest with the people, get them what they want, you know, you'll be in business the rest of your life with the same company because of who you are and what you're doing to the people. I know that for a fact. And no matter how many, again, mortgage companies are out there, or credit repair companies are out there, they still come back. I'm agreeing. They still come back.
Absolutely. And I'll be honest with you. I tell my clients this all the time. I love doing what I'm doing. If I didn't, I wouldn't take phone calls at 9 or 10 o'clock at night or on the weekends or on holidays and things like that. And the thing is that you can tell because the ones that just are doing it as 9 to 5, Monday through Friday, and it's just a job to them, it comes off on the way that they speak with you on the phone. They don't have that excitement about trying to help somebody who is desperately in need. Basically, it's just a matter of they're looking at the clock to see what time they need to leave, what time they can start their weekend, things like that. And they just don't spend the time that they need to educate the clients because this is the most important decision that they're going to make in their life.
I loved it when you said to me, Pearl, your clients, I love them. We talk personal. I'm there. And when I said to you, I don't care. I don't care. Just, and I think you were surprised at that. I think you were surprised at that.
I was a little surprised, but it was funny still.
Just get the job done, and that's what people want. They want you to be, you know, sincere with them, to be honest with you. And I said it as a joke, though. I did say it as a joke what I said to you. You probably took it seriously, but I talked to a lot of people that they didn't trust mortgage companies. They didn't believe in them, or they had to lie to them, or they would say, well, Pearl, I'm going to another company because I'm not sure. And then I love the people that would call me to say, whatever you say to do, I'm going to do. This is why I had to be so choosy in my choosing. You know what I'm saying? Like I had to get to
Absolutely.
know you. I had to get to know how you work, what you work, everything about you, because I'm not about to. As an advocate for the people, I have to know. And you really, you passed the test. You really did.
Thank you.
Well, you did. You passed the test where people trust you, and that's how it works. You know, getting their mortgage, getting their refinance. But you answered a lot of questions that I didn't even know today, as far as home equity loans. How about a home equity loan? If somebody wants a home equity loan, was it the same process?
A little different. Believe it or not, it is probably harder to get a home equity line of credit than it is to get a mortgage.
Get out.
And
Why?
the reason is because the credit score has got to be so much higher because they don't do as many lines of credit out there. They are absolutely looking for much higher credit scores. So a lot of times what I will tell my clients is, first of all, if the credit score isn't there and you do need the cash, it's not a bad idea just to do the cash out refinance because you're going to get a fixed interest rate, first of all, and second of all, your interest rate's probably going to be lower because if you have the same credit score for a line of credit that you're applying for that you are for a regular mortgage for a cash out, there's a pretty good chance that that interest rate is going to be higher because it's all fixated off of the credit score. So it is a little bit different as opposed to just going with the cash out. Not saying that's for everybody and that's for every situation, but if the scores are like in the mid to higher sixes, my recommendation would definitely be to go ahead and do the cash out refi.
So the refi is better than the home equity loan. So when people would say to me, "Pearl, you just finished my credit. Should I go for a home refi?" You would say no, right? You would say no. I'd rather go for this. If somebody just wanted to buy a home, is it better? I mean, getting in the house and then going for a refinance if their score is, let's say they didn't know me and I didn't clean up their credit. They have a low score and you got them the mortgage for some reason
Mm-hmm.
at a higher interest rate and they went back to you, let's say
Mm-hmm.
6 months later, would you have to say to them, increase your score?
Well, it depends on the type of loan that we're doing. Let's just say, for instance, because you said they didn't go to you, so let's say, for instance, if the credit score was in the sixes, what we're probably doing is we're going with what's called an FHA, which is a government loan. As a matter of fact, I'm actually doing one of those right now with one of your clients as we speak. We're going to go ahead to do it so we can get into the home because they desperately want to get into the home. But then what we're going to do is once they're in the home is we're going to work on improving the credit score. So what you can do down the line is what's called an FHA streamline, which is totally different than anything because if once you have an FHA loan and when you buy a home, you can do an FHA streamline, which means is that you can lower your interest rate and lower your payment. So now you kind of have your cake and eat it too by you got into the home that you wanted to be in desperately, but given a little bit of time, we can then also get you an interest rate that's much, much more competitive like you're hearing out there.
Is it tougher to get an FHA loan?
Easier.
Oh, is it easier?
Yes, it is. And the reason I say that is because if let's just say, for instance, with FHA, all you need is 3.5% down. That's the first thing. But if you have a credit score, I mean, there's some scores that are as low as like 580, depending on the situation, that actually can qualify to buy a home. Conventional, the lowest credit score you can go down to is a 620, but there are what's called adjustments, which go against the interest rate. Because when you hear all those great interest rates that are out there, if the credit scores are not nice and high, you have adjustments that knock down that interest rate and it goes higher. So what's going to happen is the adjustment goes for the amount that you're putting down. The adjustment goes tremendously against the credit score. So instead of going with an FHA where you can get a very nice competitive interest rate, they don't care about the credit scores much. You're going to have a much higher payment just going the conventional route, which is the reason why a lot of people do go FHA. The other part about FHA, which is very important, is that let's just say, for instance, if you are pretty tight on your income ratio, FHA is much, much more lenient when it comes to that than conventional. And the other reason is because if, let's say, for instance, if all you have is enough to put down the down payment of 3.5%, then with FHA, you can get what's called seller's assist, which pays for your closing costs. With FHA, you can get as much as 6% of the purchase price. With conventional, if you do a first-time home buyer and it's only the 3% down, the maximum you can get out of that is 3%. So there might not be enough to go ahead and cover all the closing costs. So that's the reason why FHA is not a bad program.
When does a person need a cosigner?
You need a cosigner when, let's just say, for instance, if you have a client that's doing wants to do this on their own, and we go ahead and we run the credit, we put the income in there, and then we try to find out from the client, what type of property are you trying to purchase? Are you looking to go ahead and do this on your own? Are you looking to be in the city? Are you looking to be in the suburbs? And we go over those type of questions, and then we have a better idea. And also the mortgage payment. What is the highest mortgage payment you could see yourself spending? And if they say, okay, it's this, and we put it all together and it doesn't qualify, then that's when I would suggest that, what, do we have somebody that might be able to help us just get over the top?
Is that a good idea, though?
It is, and the reason I say that is this, is that if, let's say, for instance, if you're a non-occupant co-borrower, let's say you're a parent and you're helping your child out, and let's just say, for instance, that child says, okay, you know what, I'm actually working at this job right now, and they told me I'm going to be getting a big raise, as long as I'm with the company for a year. Okay, then what happens is the child can go ahead and buy the home, but the parent will only be on that loan until the child is able to go ahead and take care of it on their own with the additional income that they're going to make. So it's almost like a Band-Aid loan where they're helping their child go ahead and get into their first home, but they also understand that once the child, they can come off the type.
Are you there?
Does that make sense?
Yeah, okay. We heard you a little bit. We heard you. The last sentence we didn't hear.
Oh, well, as far as the last part is that once the client, being the child of the parent, is able to go ahead and afford to do the refinance on their own because they already own the home, so they don't have to purchase it all over again, then the parent that helped out can be taken off the loan altogether. So now it is just the child's home by themselves. So it's like they're doing it as a favor, as a Band-Aid type of a loan, ultimately with the goal being that they're going to come off and their child is going to have the home on their own. So it's just an example of one of the type of loans that we do.
It's interesting because now everybody knows what to do and what not to do. So my job is to clear and correct everybody's credit where they're up to a 700 and 800 even before they go to you. And I think it'd be more easier on you. Am I right?
It's absolutely a lot easier, but I also do want you to keep in mind that if, let's say, for instance, and here's another one of our clients that we're working on together, let's just say, for instance, if the score is high enough and they want to go ahead and they want to be able to get into a home right away, but we can go ahead and we can do that.
As I'm
That's
working on their
perfectly
credit.
fine. But you're still working on the credit for
Yes.
them on the side, and you're improving it as we go along. Then we can always go ahead and look at doing that FHA streamline, like I was talking about just a few minutes ago, where
Refinancing
they
again.
go ahead and lower their interest rate on top of it.
Okay, so in other words, if they had it, let's say they had a 500 score when they came to me, and I got them up to, let's say, a 700, and then they come to you, then they could refinance to get that lower interest rate.
Well, it's not going to be easy to get somebody in the 500s into the home right off the bat. I'm saying, for instance, if you got their credit score up to 640, let's just use that. That's like the FHA number. You got it up to 640, and the borrower says, look, we really, really want to get in there right now. We know it's going to take a little bit longer to get our scores up to 700, but can we do that? And I say, absolutely, we could do that. So we go ahead, we go in there just to get into the home right now. But then let's say 4, 5, 6 months later, their credit score is through the roof because you are the guru. And then we go back to them and say, okay, you know what? We can now go ahead and lower your interest rate and get you a real nice interest rate that we couldn't do before, but now we can.
I was telling the people, we're trying this year, 2020, to get as many people. When I heard mortgage companies were going under, and then all these credit people have so many, it's a really bad year for people with money, with credit problems and everything else. So my goal for 2020 is to help as many people with their credit, and then if they tell me they want a mortgage, then I will say to them, I want you to call this guy up, and if you can get it now, as I'm doing your credit, and if you want to wait until I'm finished your credit, it's up to you. That's what I've been saying now till you said they can get their mortgage, they can get their home as I'm doing their credit. So this way, by next year, they'll get their home, they get their credit done, and it'll be the first time, I believe, our economy. First, I'm going to tell them what I do, then we're going to go to you, what you do, and your name, and all that kind of stuff, your phone number and all. If anybody out there has a credit problem and you think it's hard to get a mortgage, or you think it's really tough and you want to raise the score, don't guess. Or don't go on your computer and just shop around, because half the things on the computer are false anyway. We proved that last week. It's to the point where do your homework. Don't procrastinate. Don't just sit back to say, oh, we're going to make it happen one day, because it'll never happen. You will procrastinate. It'll never happen. And I see that with people. And I'm sure Joe thinks the same way when he hears somebody says, well, I'll get back to you. When somebody says, I'll get back to you, they have no interest. They want things, they want magic. You know, we are the magic workers, but still, we need for you to understand. Now, I do the credit. Now, people that wants their credit done, naturally, as I've been saying, you call my toll free, 1-800-876-CREDIT, 1-800-876-CREDIT, and then tell me, because the first question I ask them is, what are you after? Don't say you're after nothing. If you're after a mortgage, tell me you're after a mortgage, because then this way, Joe and I can help you. We can help you get through this, get your home, get your everything you want at the higher interest rate, and you won't have to procrastinate next year by saying the same thing where the credit cards are going down, and you owe a lot of money with bills. Joe, same with you. If somebody wanted to talk to you about their mortgage after they come to me, because a lot of them, like I'm talking about my clients now, they will be calling you. Do you want them to call you or you to call them?
I have no problem either way, to be honest with you, because sometimes, as long as they know that I'm calling, it's sometimes better for me to call, only because, like you said, some people sometimes will procrastinate and, they're on the phone with you. It's all hot and heavy and everything like that right then and there. But then it cools down, and the next thing you know, they might not call. So, I mean, I'm happy, for them to call me right then and there, or if you need me to call them right then and there. It doesn't really matter to me either way. It's just a matter of making sure that we have that contact so I can answer all their questions for them and they can understand that they're not in it alone.
And you talk to them all hours of the night, and I see that with it. I think that's the best way of having you call them. Because you're right, people procrastinate. Or even when somebody refers to me, they always say to me, well, Pearl, I thought you were busy. And I'm not busy, just like you are. You're not busy for your clients. And
Absolutely.
you pick up the phone, and I see that. And I tell the clients, when you call with any question, he's there. He's there. He'll answer all your questions, and he'll take the time. But if somebody wanted to get a hold of you, I mean, let's jump the gun a little bit. How can they get a hold of you?
The best way is to call me directly. I'm at 215-900-1255, and you can call me, you can text me, you can email me. I mean, any way possible to get a hold of me. I'm definitely always available. Today's Saturday. And I always try to make sure that I am available for any of my clients. A lot of times, especially for my realtors, because they're out there with the clients that are out there looking to buy homes. So they know I'm always available just in case they need to go ahead and put an offer in, then again, right away. But the most important thing is the contact, because you probably have a lot of questions. There's probably been a lot of people that have not taking the time to go ahead and answer them for you. And that's what I am here for, is to answer those questions and to let you make an educated decision for yourself, but obviously to also be here for you so I can answer any of those questions that you do have.
You do work the way I work, and I'll tell you why. Because I didn't ask you, you didn't ask me. We do not, and let the clients know. Just we do not make a commission off of you. He doesn't make a commission off of me. I don't make a commission off of him. And we spoke about this. We said, let's please the client. Let's get them what they want. Am I right?
Absolutely. That is the main difference between being a broker and a banker. Brokers, they 100% get paid off of you because that's why they have to go ahead and put a lot of discount points and things like that on there. So they can go ahead and they can get paid. When you work for a bank, the bank is the one that actually pays me. So that has nothing to do with you being the client. And that's what allows me to go ahead and absolutely do the best job for you possible. And you understanding that you are not paying me in any means whatsoever, which makes my job a lot easier because people understand that. They understand that I'm just doing this because I love doing what I'm doing, not because I'm going to be getting paid from you.
All right. Now let's have a gold. Let's have a gold next year. Let's hope that between the credit, the mortgage, that we help so many people that next year we can come right back on here to let the people know, hey, this is how many we helped get their refinance, their homes, everything. And I love it. I love it as an advocate, and I'm sure you do too, because you're an advocate, as I say. And you don't just bull the people, and neither do I. So we're out to make things happen. And this is the goal. This is why I appreciate you, because you work the same way I work as an advocate. I hope you never change, because I never will. And I'm sure you will.
I haven't changed in 20 years. I don't think I'll be changing anytime soon. That's for sure.
This is really interesting. You know, I've been saying each show that we do is going to be interesting, and we've done many shows with it. Oh, before I forget, next week, you don't want to miss next week, those Carrie Flitter, he's the one that sues the bill collectors. You know, if you want to get that mortgage, you know, that's coming to me because he's the one. And I'm trying to get his wife on to come with him because she's just as knowledgeable as he is, Carrie Flitter. But we'll see. But next week is Carrie Flitter. He's the consumer advocate that sues the bill collectors. As I'm doing your credit, they can have their cake and eat it too. And I love it. Now they can have their cake and eat it too, get their home, get where they can be. And next year should be a good year for a lot of people out there. Do you know that, Joe?
I agree with that 100%. With you helping them with the credit and myself helping them with the mortgage, I think the sky's the limit. And I also do believe that that if you're listening out there, you can buy a home. Don't let anybody tell you that it's impossible. All we have to do is just work together as a team to pull it off.
Any last remarks to the people? Say it now.
Absolutely. I want to thank Pearl again for allowing me to be on the show. I really do appreciate it. As I was saying earlier, I do really love doing what I'm doing. I'm here for anybody that needs help, anybody who just even needs to have questions answered. I'm more than happy to go ahead and help anybody. I will turn over every stone possible to try to help you either refinance or purchase a home, and it does not matter how long it takes. I will be there with you every step of the way.
That is so good. I'm glad to have you on the show, and I'm really appreciate it. I hope the people see this now. As I said, this is the first time that we're saying in pure English how to get your home, how to get your credit done, and we work hand in hand, and we're both advocates for the people. I am so glad, Joe, that you were on my show. That's one.
Oh, thank you. I appreciate it.
And as far as the credit goes, you know. If you have a credit problem and you're worried about that because you think you're going to have a higher interest, well, get your credit done. Come on. And you're going to get a discount from me because of Joe on the show and because of this station. So you're going to get a big discount. And call up to say, what's the discount? So call me up at 1-800-876-CREDIT. We will work together. Joe and I will work together to get you what you want. Credit on one hand to get it done in this year and your home. And we're going to love it because you're going to refer other people. And we both know it. And we're going to have a great time doing it. So I can come have him back in 6 months to say, look what we did. Look what we did to the people. Any last words, Joe?
No, just again, I'd like to thank everybody out there that was listening today. And as I was stating before, I very much look forward to the opportunity of helping any of you out in any situation whatsoever.
One quick question though, do you do every state?
Absolutely.
All right.
Any state in the country.
All right, this is Pearl Polto. As always, making the most of your credit. We had a good show today. We got a very education show today. As I said, the biggest problem in our country was the consumers, and it was the ignorance of the consumers. And we became very ignorant when it came to our rights, when it came to credit, and we came to mortgages. And we must have the knowledge and we must have the understanding because we are ignorant and we're going to follow as consumers. We are ignorant, and now you got educated today. And there's no reason for you to even think what you just go back to the tape, listen to it all over again, and have a solution to say, this is the year I'm going to get my home. This is the year I'm going to get my credit done. And mean it. Don't just say it, mean it. Because I don't know if it's sure about Joe, but I yell a lot. Do you yell a lot? Joe,
No,
thank you.
I don't yell a lot. I like to listen to what everyone has to say and try to work together as a team to give them the best opportunity to achieve their goals.
Well, that's what the people told me about you. And they said, we can call him anytime he talks. And sometimes I called you and you answered all the time. And I'm saying, hey, you know what? He means what he says and says what he means. And I've dealt with many mortgage companies. All they did was like work around for the commission and they never, I'm not going to tell you stories, but I won't because I finally met a person that the people can trust, believe, and do what he says he's going to do. I am so happy I had you on the show. I am so happy. We do a lot of things together, but this is the one thing we're working together with one side helping the other. And I'm sure when they come to you, when you say you have a credit problem, you say, "Hey, go to Pro Polto," and I say the same
Absolutely.
thing.
Absolutely, 100%. And one last thing I would like to say, if for any reason you do decide to call me, and if I don't answer the phone, it's only because I'm already helping a new client. So please definitely leave a message for me with your name and your phone number. And as soon as I hang up with them, I will be calling you back immediately.
No, he's not. He's in the pool swimming. You got to have some humor in it, though. But the thing is, I'm so glad. I am so glad. And I'm glad to have you on the show. Don't forget, next week, Carrie Flitter. We're going to have some really great guests on. And I'm doing some homework that you've never heard before about the people that are going to be on this show. Never heard before guests that you'd be shocked with, really shocked with, that's going to come on. And I have all kinds of topics. But if you have a topic that you want me to discuss, call me and say, Pearl, I'd like to be on the show. And we're going to have even movie stars on because I like to see that they say they're making millions of dollars. Let's see if they're making millions of dollars. But there's a lot of things that a lot of people out there, they want to get their word out. Well, you got the show to get their word out because you can just call me to say, Pearl, what about this topic? I will talk to you on the phone and I will let you know by saying, you know what, I'm interested. I am interested. For rehab, even rehab, it's something crazy. I may, tell my producer, let's go to the studio for the rehab. Let's show how it's done because these people are really important. And some people says, Pearl, I want to open up for kids. I want to open up the kids that are on drugs and everything else. Just for that, I want to open up I want to open up places and houses. How do I go about it? You go about it because you got to start. You can't talk about it. You have to do it. This is where Joe's talent is and my talent is. I don't like to talk about it. I just like to do it. This is, again, Pearl Polto, as always, making the most of your credit and your mortgages today. Get that mortgage. Pick up the phone and call us, no matter what. Pick up the phone and clear up your credit. Thank you.